Question 1. An insured individual with a whole life insurance policy in Mississippi has chosen to surrender the policy for its cash value. Which of the following non-forfeiture options, if available, would provide the highest immediate cash payout? A. Reduced paid-up insurance. B. Extended term insurance. C. Cash surrender value. D. Automatic premium loan. Answer: C. Cash surrender value. The cash surrender value option explicitly pays the policy owner the accumulated cash value of the policy, minus any outstanding loans or surrender charges, providing the highest immediate cash payout. Reduced paid-up insurance and extended term insurance are also non-forfeiture options, but they utilize the cash value to purchase a new, smaller policy or a policy for a shorter term, respectively, rather than paying out cash directly. The automatic premium loan is a policy loan feature used to pay premiums, not a non-forfeiture option for surrendering a policy. Remember that surrendering a policy for its cash value means ending the coverage. Question 2. A Mississippi resident purchases a variable life insurance policy. Which of the following statements regarding the separate account is true? A. The assets held in the separate account are guaranteed by the insurer. B. Policyholders bear the investment risk for the separate account. C. The separate account's value is fixed and guaranteed. D. Funds from the separate account can only be invested in general account assets. Answer: B. Policyholders bear the investment risk for the separate account. In variable life insurance, the separate account's performance directly impacts the policy's cash value and death benefit, meaning the policy owner, not the insurer, bears the investment risk. Unlike the insurer's general account assets, the separate account is not guaranteed and its value fluctuates with the performance of the underlying investments, such as stocks and bonds, which are typically managed by the insurer. This distinct feature allows for potential growth but also carries the risk of loss. Always remember that variable means the value can go up or down based on investment performance. Question 3. Under a group life insurance policy in Mississippi, the conversion privilege allows an employee to convert their group coverage to an individual policy without evidence of insurability. What is the typical time frame within which an employee must exercise this privilege after termination of employment? A. 15 days. B. 31 days. C. 60 days. D. 90 days. Answer: B. 31 days. The conversion privilege in group life insurance typically grants an employee 31 days after termination of employment to convert their group coverage to an individual policy without needing to prove their insurability. This ensures continued coverage, often at a higher premium, for individuals leaving the group. This timeframe is a standard provision designed to prevent gaps in coverage. Think of it as a one-month safety net to keep your life insurance in force after a job change. Question 4. A Mississippi licensed life insurance agent recommends that a client replace an existing life insurance policy with a new one solely to generate a new commission for the agent, providing no discernible benefit to the client. This unethical practice is known as A. Rebating. B. Twisting. C. Churning. D. Misrepresentation. Answer: C. Churning. Churning occurs when an agent persuades a policy owner to replace an existing policy with a new one issued by the same company, primarily to earn new commissions, often without the client's best interest at heart. While twisting involves replacing a policy with one from a different company, and rebating involves offering something of value not stated in the policy as an inducement to buy, churning is specific to unnecessary replacements within the same insurer. Remember, churning implies excessive, unnecessary activity to generate commission within the same company. Question 5. In Mississippi, what is the standard grace period for payment of a life insurance premium after its due date? A. 15 days. B. 20 days. C. 31 days. D. 60 days. Answer: C. 31 days. The standard grace period for life insurance premiums in Mississippi, as in most states, is 31 days. This provision allows the policy owner an extended period beyond the due date to pay the premium without the policy lapsing. If the insured dies during this grace period, the death benefit is typically paid, minus the overdue premium. This grace period acts as a crucial safety net, ensuring continuous coverage even if a payment is slightly delayed. Question 6. All of the following statements are true regarding the incontestability clause in a life insurance policy in Mississippi, except A. It prevents the insurer from denying a claim based on misstatements in the application after a certain period. B. It typically applies after the policy has been in force for 2 years. C. It applies to claims related to misstatement of age or gender. D. It does not apply to non-payment of premiums. Answer: C. It applies to claims related to misstatement of age or gender. The incontestability clause generally states that after a policy has been in force for 2 years, the insurer cannot deny a claim due to material misrepresentations in the application. However, the incontestability clause does not apply to misstatement of age or gender. Claims for misstatement of age or gender are adjusted based on the correct information, not denied, regardless of how long the policy has been in force. It also does not prevent denial for non-payment of premiums. This clause is vital for ensuring policy owner security against post-claim scrutiny. Question 7. A life insurance applicant in Mississippi has completed the application form but has not yet paid the initial premium. When would coverage typically begin? A. On the date the application was signed. B. On the date the policy is delivered to the applicant. C. Upon the insurer's approval of the application and the issuance of the policy. D. Upon the issuance of a conditional receipt and completion of any required medical exams. Answer: C. Upon the insurer's approval of the application and the issuance of the policy. If an applicant has completed the application but has not paid the initial premium, coverage typically does not begin until the insurer approves the application and issues the policy. A conditional receipt, which could provide earlier coverage, is only issued if the initial premium is paid at the time of application and any conditions, like passing a medical exam, are met. Without premium payment, there is no consideration, and thus no binding agreement until the insurer makes a formal offer by issuing the policy. Always remember that coverage usually ties directly to premium payment and policy issuance. Question 8. In Mississippi, an agent selling a life insurance policy to a client is required to provide a buyer's guide and a policy summary. At what point must these documents be provided? A. Only upon request by the applicant. B. At the time of policy delivery. C. No later than the time of application. D. Within 30 days of policy approval. Answer: C. No later than the time of application. In Mississippi, as in many states, the buyer's guide and policy summary must be provided to the applicant no later than the time of application. The buyer's guide offers general information about life insurance, while the policy summary provides specific details about the policy being considered, including premiums, death benefit, and cash values. This ensures that prospective policy owners have comprehensive information to make an informed decision before committing to the purchase. Providing these documents upfront promotes transparency and consumer understanding. Question 9. Which of the following policy riders on a life insurance policy in Mississippi would provide an additional death benefit if the insured dies as a result of an accident? A. Waiver of premium rider. B. Guaranteed insurability rider. C. Accidental death benefit rider. D. Cost of living rider. Answer: C. Accidental death benefit rider. The accidental death benefit rider, often referred to as double indemnity or triple indemnity, pays an additional death benefit if the insured's death is directly caused by an accident, as defined in the policy. The waiver of premium rider pays premiums if the insured becomes disabled. The guaranteed insurability rider allows for additional coverage without evidence of insurability, and the cost of living rider adjusts the death benefit for inflation. This rider provides extra financial protection specifically for unforeseen accidental fatalities. Question 10. A Mississippi resident surrenders their whole life insurance policy and receives a lump sum cash value. How is this lump sum cash value typically treated for income tax purposes? A. It is completely tax exempt. B. Only the amount exceeding the premiums paid is taxable as ordinary income. C. The entire cash value is taxable as ordinary income. D. It is taxed as a capital gain. Answer. B. Only the amount exceeding the premiums paid is taxable as ordinary income. When a whole life insurance policy is surrendered for its cash value, only the amount that exceeds the total premiums paid into the policy, the cost basis, is considered taxable income. This gain is taxed as ordinary income, not as a capital gain. The portion of the cash value that represents a return of the premiums paid is received income tax-free. This is an important distinction to understand for tax planning related to life insurance cash values. Question 11. An individual in Mississippi wants to purchase a life insurance policy but is concerned about future premium payments if they become totally and permanently disabled. Which rider would best address this concern? A. Payer benefit rider. B. Waiver of premium rider. C. Accidental death and dismemberment rider. D. Term conversion rider. Answer. B. Waiver of premium rider. The waiver of premium rider is specifically designed to waive future premium payments if the insured becomes totally and permanently disabled, as defined by the policy, ensuring the policy remains in force without the policy owner having to pay out of pocket. The payer benefit rider is typically for juvenile policies, waiving premiums if the payer, usually a parent, becomes disabled or dies. The accidental death and dismemberment rider provides benefits for accidental death or severe injury, and a term conversion rider allows conversion of a term policy to a permanent one. This rider offers crucial financial relief during a period of lost income due to disability. Question 12. Which of the following is the primary purpose of the Mississippi Life and Health Insurance Guaranty Association? A. To regulate insurance rates and policy forms in the state. B. To protect policyholders in the event an authorized insurer becomes insolvent. C. To investigate and prosecute insurance fraud cases. D. To provide state-sponsored health insurance to eligible residents. Answer. B. To protect policyholders in the event an authorized insurer becomes insolvent. The primary purpose of the Mississippi Life and Health Insurance Guaranty Association is to protect resident policyholders, beneficiaries, and annuitants against financial losses in the unlikely event that a member insurance company becomes insolvent and cannot meet its contractual obligations. It steps in to pay covered claims up to certain limits. It is a safety net for consumers, not a regulatory body for rates, a fraud investigation unit, or a healthcare provider. Think of it as an insurance for your insurance if the company goes out of business. Question 13. A life insurance policy in Mississippi contains a suicide clause. If the insured commits suicide 2.5 years after the policy's effective date, how will the claim typically be handled? A. The insurer will deny the claim and return the premiums paid. B. The insurer will pay the full death benefit. C. The insurer will pay a reduced death benefit. D. The claim will be subject to further investigation under the incontestability clause. Answer. B. The insurer will pay the full death benefit. Most life insurance policies in Mississippi, and generally across the U.S., include a suicide clause that states if the insured commits suicide within a specific period, typically 2 years, from the policy's effective date, the insurer will only refund the premiums paid. However, if the suicide occurs after this 2-year exclusionary period, the full death benefit will typically be paid. This clause is distinct from the incontestability clause, which addresses misrepresentation. Understand that the suicide clause has a limited time frame, after which the exclusion no longer applies. Question 14. An agent in Mississippi knowingly makes a false statement on an insurance application to ensure the applicant qualifies for coverage. This action is an example of A. Twisting, B. Rebating, C. Unfair discrimination, D. Misrepresentation. Answer: D. Misrepresentation. Misrepresentation involves making false or misleading statements to secure an insurance policy or induce a policy owner to purchase or lapse a policy. In this scenario, the agent knowingly providing false information on the application is a clear act of misrepresentation, which is illegal and unethical. Twisting and rebating are specific types of unfair trade practices, and unfair discrimination involves treating individuals differently based on protected characteristics, which are not directly applicable here. Always remember that any false statement, whether by the agent or applicant, can be considered misrepresentation. Question 15. In Mississippi, what is the free look period for a newly purchased life insurance policy? A. 5 days. B. 10 days. C. 20 days. D. 30 days. Answer: B. 10 days. In Mississippi, a newly purchased life insurance policy generally comes with a minimum 10-day free look or right to examine period. This period begins when the policy owner receives the policy, allowing them to review it and, if dissatisfied for any reason, return it for a full refund of premiums paid. This provision is designed to protect consumers by giving them a chance to fully understand the terms before making a final commitment. Always advise clients to thoroughly review their policy during this critical time frame. Question 16. Which of the following statements about a limited pay whole life insurance policy is true? A. Premiums are paid for the entire life of the insured. B. The policy provides coverage for a specific number of years. C. Premiums are paid for a specified period, but coverage lasts until death or age 100. D. The cash value does not grow until all premiums are paid. Answer: C. Premiums are paid for a specified period, but coverage lasts until death or age 100. A limited pay whole life insurance policy requires premiums to be paid for a defined period, such as 10 years, 20 years, or until a specific age like 65. However, once all premiums are paid, the policy remains in force and continues to provide coverage for the insured's entire life, typically until age 100, and the cash value continues to grow on a tax-deferred basis. This type of policy offers the benefits of whole life with a shorter premium paying period. It's a way to pay off your life insurance policy sooner while maintaining lifelong coverage. Question 17. A policy owner in Mississippi wants to reinstate a lapsed life insurance policy. Which of the following conditions is typically not required for reinstatement? A. Payment of all back premiums with interest. B. Evidence of insurability. C. Payment of any outstanding policy loans with interest. D. The insured must be under a certain age at the time of reinstatement. Answer: D. The insured must be under a certain age at the time of reinstatement. To reinstate a lapsed life insurance policy, the policy owner is typically required to pay all back premiums with interest, provide evidence of insurability, to prove they are still a good risk, and pay off or reinstate any outstanding policy loans with interest. There is generally no requirement for the insured to be under a certain age for reinstatement, though reinstatement must occur within a specified timeframe, often 3 to 5 years after lapse. Reinstatement aims to restore the policy to its original terms, including its original issue age and cash values. Question 18. When a life insurance policy is assigned, which party maintains all rights of ownership, including the right to name the beneficiary? A. The assignee. B. The beneficiary. C. The policy owner. D. The insurer. Answer: C. The policy owner. An assignment of a life insurance policy transfers ownership rights to another party, either collaterally, as security for a loan, or absolutely, all rights are transferred permanently. However, if the question implies a collateral assignment, the original policy owner typically maintains all rights of ownership, including the right to name or change the beneficiary, unless specifically restricted by the assignment agreement. In a full absolute assignment, all ownership rights would be transferred. But generally, the policy owner retains control of who receives the death benefit. Question 19. A universal life insurance policy in Mississippi has a flexible premium. What does this flexibility typically allow the policy owner to do? A. Change the death benefit amount only. B. Adjust the premium amount and frequency within certain limits. C. Borrow cash value without repayment. D. Invest directly in specific stock market funds. Answer: B. Adjust the premium amount and frequency within certain limits. The flexible premium feature of universal life insurance allows policy owners to vary the amount and frequency of their premium payments, within specified policy limits, after the initial premium. This contrasts with whole life policies that have fixed premiums. This flexibility is a key characteristic of universal life, providing adaptability to changing financial circumstances. Remember, flexible means you have control over how and when you pay, as long as the policy doesn't lapse. Question 20. Which of the following actions by a life insurance agent in Mississippi would be considered an unfair claim settlement practice? A. Requiring a claimant to submit a written proof of loss. B. Failing to affirm or deny coverage within a reasonable time after proof of loss statements have been completed. C. Investigating the facts of a claim promptly. D. Communicating with the claimant regarding the claim status. Answer: B. Failing to affirm or deny coverage within a reasonable time after proof of loss statements have been completed. Failing to affirm or deny coverage of claims within a reasonable time after proof of loss statements have been completed is a prime example of an unfair claim settlement practice. Insurance regulations require insurers and agents to act promptly and fairly in handling claims. The other options listed, requiring proof of loss, prompt investigation, communication, are all standard and appropriate parts of the claims process. Timeliness is crucial in claims handling to ensure fair treatment of beneficiaries. Question 21. What distinguishes a modified endowment contract, MEC, from a standard life insurance policy for tax purposes in Mississippi? A. MECs offer tax-deferred cash value growth. B. Loans and withdrawals from a MEC are subject to last in, first out, LIFO, taxation and potential penalties. C. MECs have a higher death benefit to premium ratio. D. All cash value accumulations in a MEC are tax-free. Answer: B. Loans and withdrawals from a MEC are subject to last in, first out, LIFO, taxation and potential penalties. A modified endowment contract, MEC, is a life insurance policy that has been funded too quickly, exceeding federal tax law limits, the 7-pay test. While it still provides a tax-free death benefit, its cash value accumulation and withdrawal rules are less favorable than a standard life insurance policy. Specifically, loans and withdrawals from a MEC are taxed on a last in, first out, LIFO basis, meaning earnings are taxed first, and withdrawals before age 59.5 may incur a 10% penalty, similar to an annuity. This taxation makes MECs less attractive for cash accumulation than traditional life policies. Question 22. A life insurance policy's reinstatement provision allows a lapsed policy to be restored. What is the primary benefit of reinstating a policy compared to purchasing a new one? A. The reinstated policy will have a lower premium. B. The incontestability and suicide clauses will start over. C. The policy will maintain its original issue age and cash values. D. Reinstatement does not require evidence of insurability. Answer: C. The policy will maintain its original issue age and cash values. The primary benefit of reinstating a lapsed policy is that it allows the policy to regain its original issue age, original cash value, and the original effective date of its incontestability and suicide clauses. They generally do not start over. Purchasing a new policy would result in a higher premium based on the current older age and a new waiting period for the incontestability and suicide clauses. While evidence of insurability is usually required for reinstatement, the benefit of retaining the original policy's foundation is significant. Question 23. The entire contract provision in a Mississippi life insurance policy states that the policy and the application, if a copy is attached, constitute the entire contract between the parties. What is the main purpose of this provision? A. To allow the insurer to amend the policy terms at any time. B. To prevent the policy owner from making changes to the policy. C. To ensure that all relevant terms are contained within the policy document, preventing outside documents from being used to interpret it. D. To require the policy owner to sign each page of the policy. Answer: C. To ensure that all relevant terms are contained within the policy document, preventing outside documents from being used to interpret it. The entire contract provision ensures that the policy document itself, along with the application, if attached, contains the complete agreement between the policy owner and the insurer. This prevents either party from introducing external evidence or oral agreements to modify or interpret the policy's terms. It protects the policy owner from surprises by requiring all agreed-upon terms to be explicitly stated within the policy. This provision ensures clarity and prevents disputes over what was or was not agreed upon. Question 24. A Mississippi resident has a life insurance policy with an irrevocable beneficiary designation. If the policy owner wishes to change the beneficiary, what is required? A. Only the policy owner's written request. B. The written consent of the current irrevocable beneficiary. C. A court order. D. Notification to the insurer, who will make the change automatically. Answer: B. The written consent of the current irrevocable beneficiary. If a beneficiary designation is irrevocable, it means the policy owner cannot change the beneficiary without the written consent of that named irrevocable beneficiary. This designation provides a much stronger assurance to the beneficiary that they will receive the death benefit, as their rights are vested. In contrast, a revocable beneficiary can be changed by the policy owner at any time without consent. Understanding the difference between revocable and irrevocable beneficiary designations is crucial for proper policy management. Question 25. Which of the following describes an agent's fiduciary responsibility when handling premium payments from policy owners in Mississippi? A. Agents can use premium payments for personal expenses, provided they repay the amount within 30 days. B. Agents must deposit premium payments into their personal bank account before forwarding them to the insurer. C. Agents must act in a position of trust and promptly remit all premiums collected to the insurer. D. Agents are exempt from fiduciary responsibilities once the policy is issued. Answer: C. Agents must act in a position of trust and promptly remit all premiums collected to the insurer. An agent's fiduciary responsibility means they must act in a position of trust and confidence regarding funds belonging to others. This includes promptly and accurately remitting all premiums collected from policy owners to the insurer. Misappropriating or delaying the transmission of premiums is a serious violation. Agents are not permitted to use premium payments for personal use or deposit them into personal accounts. Always remember that as an agent, you are handling clients' money and must do so with the utmost integrity and compliance.